Hey, welcome everybody to the 40 Finance channel. Today we're going to be digging into the chip stocks a little bit. As a holder of the QQQ, I've always got my eye on the chip stocks. I don't own any of them directly. If you followed the channel, you may remember that I owned some Taiwan Semiconductor, which is a fantastic company on paper. I did end up selling out of that near the first part of the year for a small profit, just because of all the confusion and political pressure that's going on in Taiwan. But this is sort of a bigger story. This is kind of how these chip stocks, which are such a huge component of the QQQ, how they are kind of dragging stuff down. They're not the only reason that the Q is in the 280s right now, but let's be honest, these things were flying high at superior multiples, as recently as really 6 or 8 months ago. And if you go back to last year or the year before, they couldn't have been flying any higher. So at that time, a lot of the talk, well, of course, was about chip shortages. How chips are in everything now, which is true. Then you also had the backlog of cars, automobiles that weren't being made and other items because of a shortage of chips. But now with the Fed's recent activities, we're sort of in this place where everyone's forgotten those things, right? And it's been, what's going to happen is chip stocks are just going to go down, right? And that's just the way it is. So we're going to look at a few chip stocks, some of the chip stock headlines that are going on right now, and I'll share my thoughts on, which ones may or may not be overvalued, at least in my opinion. But I will say, generally speaking, across the board, I think the death of the chip stock and the fact that they're, going to regress in terms of production, all the theories from 2020 that sort of rose to the top, they're really still true. The only thing that we're seeing from a news standpoint is dents and dings on a headline basis, right? So cryptocurrency, some of the changes with Ethereum and whatnot, I have no doubt that those put a dent into some chip manufacturers' plans. We also have seen sort of the peak of gaming. And now, I think gaming gets bigger as time goes on, but a lot of people invested in gaming setups while they're at home in COVID. So yes, there's probably some tail off into there. But I think to come out and say that a successful chip maker is going to go negative on the comps is probably an overblown sentiment. But we'll take a look at it. Kevin Hawthorne, good to see you from Florida. Hopefully you've got your power and your plumbing and everything going on. I know it's rough down there. Best wishes to you, sir. All right. Before we do hop into, I want to remind everybody about the Seeking Alpha special that's going on here in September. I do not know if they're going to extend it for October. So I've reached out and asked. I haven't gotten a reply back yet. But if you're interested in trying Seeking Alpha's 7-day free trial, $99 one-year subscription, the exact same tools that I use here on this channel, $99, 12 full months. Your card doesn't get charged until, I believe, the 7th day. I mean, if you don't like it, just cancel by the 6th day and you should be fine. My affiliate link's in the description. Shout out to everybody who's helped support the channel. Okay, let's turn this thing off. There we go. All right, so we'll start here with the SOX, which is a semiconductor ETF, and it's basically a collection. Let's take a look at the holdings here. Here's the collection of stocks that are in the SOX. If you will, you got Broadcom, NVDA, all the names you know. There's nothing really crazy in here. I think the only thing, a notable miss is Taiwan Semiconductor is not in here. But for the most part, all the ones that you hear about on a normal basis are included in these top 10 holdings. So it is an interesting ETF to follow. Even if you don't specifically own a chip stock, it is a good one to watch and get some idea of where that market's going. And you can see in the past 1 year, it's down 26%. Past year to date, though, it's down 40%. And if we extrapolate to 5 years, you're actually up 111%. So the good news about looking at the 5-year view is I think it just represents really what chip stocks are about in this modern era. Obviously, you know, we could see regression from here at 334 just because of the way the market is going. But I would say generally speaking, across this 5-year stretch, you get some idea of the power of the semiconductor space and how it's being implemented across, you know, practically everything we do. All right, so there is that. And what we're going to look at next here, and I'm just going to use NVIDIA on the Seeking Alpha platform. And I'm just going to news, and it gives you really every headline tied to NVIDIA. So let's take a look at these headlines, and let's just kind of sort of assign bullish, bearish sentiment to these headlines. All right, so this one comes out yesterday, gives like a market overview. Frankly, you know, chips mixed isn't much of a headline, but Intel unveils new data center GPUs, and Gelsinger bemoans existing offerings. Okay, so I would take this as a bullish headline, particularly if I was an Intel investor, because you've got some new product offerings coming out. Remains to be seen how those will go. But again, they're producing, right? They are not in a stage with this recession where they are holding back new products. They're not packing stuff up. In fact, if you want to go the longer view on Intel, when you think about the factories and foundries that they're building, it's an incredible deal from a fundamental standpoint, but I just don't know if you're going to get much of a return at this point until like late 2023, because it's just going to take forever to build that stuff out. All right, next headline, Taiwan Semiconductor rises as major customers may cut back their 2023 orders. So this is the kind of terminology that I think trips up a lot of people right now with all the negatives that are going on. So major customers may cut back. And the big one that they're probably talking about, and I don't have that headline, is the report that came out today about Apple, which perhaps Apple, who's ordering a boatload of iPhone 14s to be produced, but there's rumors that perhaps they are, you know, not ordering as much incremental supply, or they're gonna pause, start with the stock that they have, which is millions and millions of units. So there's some rumors that, hey, maybe Apple isn't planning to sell as many iPhones as we thought they were. Now, so that's where you can get into the cutback. And the difference between a cutback and a negative comp, two different worlds, right? Because you could still be talking about plus year-over-year revenue, plus year-over-year EPS. So you just have to be careful with words like this and what you draw out of them when it comes to stocks. Because let's just say, for fun, that Taiwan Semiconductor grew 20% sales last year. Okay, 20% revenue. I'm making this up, by the way, and we'll say they got 20% EPS boost as well. Well, that is, of course, good, but let's cut back, to highlight this term again, let's cut back those numbers, and maybe it goes to plus 10% this year revenue, plus 10% this year EPS. Well, all of a sudden, that news is not necessarily good, but it's not bad, right? There's retailers out there, and there's other sectors of the economy where you're talking about a negative comp, where they made plus 5% revenue in 2021, and next year they're going to be negative 10% on that same number. So that's the big difference. Negative comp and not growing as quickly, two very different things. Let's see if we get any numbers in this report. Major clients of Taiwan Semiconductor include Apple, AMD, Broadcom, NVIDIA. The report comes just a few days after it was reported that Taiwan's export orders unexpectedly rose in August due to new Apple products. La-di-da. Let's take a look at this one. TSM recently issued its monthly revenue report where it said it generated $6.8 billion in revenue, up 16% month over month and 58% year over year. Okay, so buried in this report, which, to me sounds like a negative headline, buried in down here at the very bottom, we see that August was plus 58% year over year. That's pretty darn good. Now, I think it's very fair to assume that in this August of this year, that those orders and demand for that product came several months ago, right? You can't have Apple with a new phone. It's not like they call you up like McDonald's in July and say we need millions of units to be delivered in August. It doesn't work that way. It's planned very, very far out. However, 58% is a pretty extreme number. So let's just say next year's August, without me having any knowledge of the product roadmap, let's just say it drops substantially and it goes down to plus 20%. Well, good news if you're an investor, they're still growing. Okay, now, are you going to get a rocket ship to the moon out of plus 20% next August? Probably not. However, the fact that they're still growing should be looked at as a positive. All right, so that's one headline up close. Let me see if I can go back here. All right, Monday, September 26th. Actually, let me adjust this. All right. Sorry, that was on the back end bugging me here. Chips fall as volatile currency markets add to fears. Intel's Mobileye expands Geely deal. I don't know a ton about that. But here we're talking about chips falling due to currency markets. So we're not talking about demand for chips. And I have, I'm not questioning that currency exchange rates can certainly affect the bottom line. We're not talking about a chip problem here, okay? We're talking about currency markets, arguably unrelated at the highest level. Next one, Thursday, September 22nd. NVIDIA AMD lead chips lower as SOX index at lowest level in nearly 2 years. Okay, so these stocks are losing and the semiconductor index is at its lowest levels in 2 years. Now, everybody has a view on our current situation, but if you're on the bright side of buying low, then you could certainly make the argument that somebody, bought this not quite 2 years ago, and you have an opportunity to start investing in stocks at a point lower than they did. So, do you think semiconductors and chip stocks will be more valuable in the future than they are today? Not necessarily by December, but how about by 2024, 2025? Maybe you don't even have to wait that long. Isn't that what investing is, right? And these companies that you believe in, do you think AMD is going to pack it up during this recession and call it in 2023? They're just going to close their doors, get zero sales, not grow at all, and lose complete relevancy? I certainly don't believe that. So I would look at lowest levels in nearly 2 years as a, pretty much a buy signal if you're trying to do things the old-fashioned way, which is buy low, sell high. All right, what else do we have? SoftBank CEO set to travel to South Korea to discuss, I don't know much about that. This is Wednesday, September 21st. Why did NVIDIA go up today? CEO Wang says there's room for products in China. All right, well, let's talk about that for a second. All right. CEO said there is still a large space for the tech giant's products in China, despite worries over restrictions. If you're not familiar with the background on that, there is some talk that the United States will limit what American chip makers can offer to China for security concerns. We don't know where that's going to go yet, but it is on the table. And that brings up, so there's two ways to look at that, right? On the one hand, that could be bad news, right, for NVIDIA. And in fact, the way this is written, you would assume it is bad news, period. However, there is also a world, call it 2 years from now, where these concerns are alleviated. The China market opens back up. They're still dealing with COVID, as most of you know. And you all of a sudden have an incremental add to the revenue and earnings of NVIDIA without them really doing anything special, just opening up another market. So not good news in the short term. I will say that over the long term, there is some opportunity to benefit from a headline like this. Let me see if we have any numbers. Okay, NVIDIA said the impact could be worth as much as $400 million in revenue, while AMD said it did not see a material impact. So $400 million, obviously for you and I in a lemonade stand, that's going to be a pretty big hit. But let's take a look at NVIDIA's revenue this past little while. Let's see if we can get it right on the stock page. Okay, so revenue annual in January of 2022. Well, in that fiscal year, NVIDIA made $26.91 billion. And the material impact could be worth its $400 million in revenue. Not good news, but barely a drop in the bucket if that's what they're suggesting, okay? And AMD said it did not even see an impact from this headline. So TBD on what actually happens, but let's just be careful on how negative we go on those types of headlines. Here's one. Here's another bear. Micron Western Digital slump as Mizuho downgrades over price declines. Let's see if we can get a quote out of this. While both Micron and Western Digital have executed well with a robust industry-leading memory portfolio and improving 22 terabyte hard disk drive, we see slowing consumer, hyperscale demand, and high inventory as headwinds. The analysts lowered the price targets on Micron to 56 from 75, and Western Digital to 40 from 62. Rakesh, who is the analyst, added that the downgrade may be late in terms of timing, but it's likely that a weak macro environment, downside risk over the next 4 to 6 months. Okay, so 4 to 6 months. I think that, without me knowing what this analyst looked at, just me taking the pulse of the world in its current standing, particularly over here on the U.S. markets, 4 to 6 months, yeah, it doesn't really feel like we're going to have an explosion of consumer sales the way that inflation and stuff is going. But are you investing in Micron today to reap immediate rewards, let's just say by December 31st? Are you investing in Micron today for what I believe is a small dividend? Let's take a look. Dividend yield 0.82%. Okay, so small dividend. And then what they're going to do in the future, is the world going to use less memory chips in the future? I don't think so. I think the demand for memory, although certainly could be a roller coaster ride here in the short term due to macro conditions, I think it goes up. So that's my 2 cents. While we are on Micron, let's start digging into some of these specific stocks. So in order to do that, you can do this on any stock in Seeking Alpha. or at least all the ones, certainly anything Russell 2000, S&P 500. But let's go to valuation. And one of the things in this crazy time when we've seen valuations explode, if you go back 15 months, when I say valuation, I really should say multiple, right? PE multiples, sales multiples, the amount of multiple that investors were willing to spend on stocks at a time when sort of the TINA trade was hot. There is no alternative. But what do we have right now with Micron? And one of the things I find particularly useful on Seeking Alpha is this percentage difference to the 5-year average, okay? And I kind of started here with Micron out of the blue, but it's interesting to see this. If we go, we'll even try to look ahead. Non-GAAP forward, let's skip. I can't remember if they reported non-GAAP or GAAP, but just to be fun, or just to be fair, let's look at GAAP forward PE, okay? So obviously a projection, but currently at 657, sector median, which to be fair also includes like NVIDIA, AMD. Micron's not really that type of super growth platform, so I'm not surprised that they're under the sector median. But they are 47% under the 5-year average of their GAAP forward PE, okay? 47%. So maybe the world has changed, and maybe valuation multiples have certainly changed, but let's cut that in half, right? Let's bump this up to, say, a 10, all right? A 10. And see what that would give us if the market were to come back. So let's go earnings estimates. We got a fiscal period ending in August that I'm assuming we'll hear about in September. So let's look ahead. Which one are we going to look at here? Oh, okay. So here, actually, this is interesting if this happens. And so this would be a stock that I would be cautious of. And I did speak too soon. If you go to the 10 on forward PE for this fiscal year, you would have $8.30 as the EPS times 10 would put you at 80. But you see this problem, at least from a projection standpoint, is Micron coming in potentially at a $4.19 EPS next fiscal year. That is not good. Okay, that's a 50% decrease in EPS. That would be a red flag for me in the short term. 10 times, $4.19 is going to be $40, and that insinuates this could go lower. Why does Micron have this significant drop across 29 analysts? I'm not sure. Do they have some infrastructure plans going on? Are they building factories or something? I don't know. It would require more research. Does kind of stand out like a sore thumb, though, because you got 830, then a boost in 2024 back to 636. I don't know if I would take this 419. It could be as bad as this person right here, who's giving a low EPS estimate of 71 cents. Meanwhile, the high is 1308. You usually have more of a spread or a tighter spread if you look at this and then you go out a couple years and you look at this. That's a pretty high spread for an EPS projection. But I'm just going to move on and say that at least with Micron, I'm surprised that EPS is projected to drop as much as it is. All right, let's take a look at another one. Let's go to Texas Instruments, okay? Another sort of like, I don't want to say industrial, not as sexy of a chip producer, but by and large has been a good investment for investors like yourself, right? So if we go to their PE gap forward, currently at 1702, the difference to the 5-year average is minus 26%. It's typically at 23. Now that will include the boom, the multiple expansion that we saw between 2020 and 2021, but keep in mind it's a 5-year average. So those are only 2 years at best of the 5-year average. Let's see what these guys are projected to do next year. Oops, I'm on the wrong tab. Estimates. All right, this is a good example. EPS here at 888, that is minus 7% looking ahead to next year, okay? So 888, and I might have to get my calculator here. Let's just call it 8 for fun. And I'm going to say that the historical 5-year average for 4P was 23. I'm going to bring that down, how about to 18? Just picking numbers. That gives you 144. So Texas Instruments could still have some room to slide. All right, so they're in the same boat as Micron. Before I did this video, I was looking at some of the other guys like NVDA. And let me see what theirs says. All right, so NVIDIA, P-gap they are 100% non-gap. So let's just take that for what it's worth. P non-gap forward, 3670. That's minus 12% on what they normally do. And if you just scroll through some of these 5-year averages, you have mostly good news in terms of negative is a positive, right? So price to sales forward, those are all chopped off. So the valuation has compressed quite a bit. The forward non-GAAP PE average is 40. So maybe you would say this 36, 37 in times of high interest rates, that could be fair. Are they expected to grow at all? Let's take a look. And yes, so right now, so their fiscal period of January 2023, that's when it ends. So the very first part of next year, they have a slightly irregular calendar that they don't end on December 31st and closer to January 31st. But as of right now, across 39 analysts, you got a 456 as the average. So 456, and what did we say? And then we're going to call this number here fair for what's going on right now. So 36 times 456. 36 times 4.56. That's 164. NVIDIA right now at 127. So I would say, you know, is NVIDIA like on colossal sale? I would say it's you know, at least 10% on sale. 10% would be $12. Added to here, it'd give you about 140. So I would feel good purchasing NVIDIA, certainly as it pertains to my QQQ holdings. All right, let's try to find out what AMD is doing. It should be, here's my little search bar. There we go. AMD. And valuation. Now AMD, this could be a little interesting because they actually used COVID to leap into profitability. Which, you know, they were sort of it wasn't quite the startup story, but it was a turnaround story. So P-gap, non-gap forward, currently at 15. That's 67% less on average over the past 5 years. And even some of the different metrics, whether it's price to sales, is down in the 30s, minus 30%. Price to cash flow, you know, almost down 90% from a valuation standpoint. And if we go Oh, before I do that, I got to remember this number. Minus 60. So let's give them a 25. Is that fair on the 5-year average? Knowing that 5-year average is 46, and I'm picking, I'm throwing darts here, but I'm going to give them a 25, recognizing that we are in tough economic conditions right now. So 25, their earnings estimates, let's see if they're growing. Next year, kind of flat, could actually end up flat, 488. For the sake of argument, let's pretend it does go flat on the EPS line. Keep hitting the wrong button here. So 435, we'll assume flat EPS, but an increase in multiple. That is 108.75. So again, you certainly got 10% there, I would think. If not 20% on where things are right now. All right. That's another big one that I wrote down. Let me just look off to the side. Oh, Qualcomm. And I haven't looked at these, and you can tell with Micron, I didn't see the value in Micron. I am questioning their earnings estimate. Across analysts, I think it might be the victim of a low ball. Let's see what Qualcomm's doing. Valuation. I don't follow this one, but I'm going to assume they're non-GAAP. I don't follow this one from their valuation metrics is what I was getting at there. So non-GAAP forward, just assume that's what they do. 961. That is 46.5% off the 5-year average. Okay, so that's a pretty big difference. So we'll take the $17.99, we'll recognize the current economic conditions, and how about we give them a 12, just for fun. We're going to give them a 12 on forward non-GAAP earnings multiple. Now let's see what they're thinking for next year. Their fiscal period is about to end in just a couple days. Right here. So we'll be looking ahead to September of 2023 here very, very shortly. Got a very small, this is similar to AMD, very small growth planned on the EPS line. So let's just call it flat. I'm trying to be super conservative here. But I am calling for multiple expansion. So 1252 times 12 gets you to 150. And you're at 118. Again, even if I'm maybe not totally wrong, let's just say that I'm off 10% on my projection, right? 150 is what I'm saying. And let's just pretend this only has plus 10% to go. That's another $11, right? That gets you into the 130s pretty easily. In a 1-year time, and again, we're so spoiled from what we saw in 2021. Stocks don't typically go, especially these big, gigantic stocks, don't move 25, 30% every single year. It just doesn't happen. But with Qualcomm, you do get a 2.49% yield. So there's more than one reason to get into it. But the reason that I came in and did this today was to sort of just pick a sector, chip stocks, talk a little bit about the negative sentiment that was going on, and try to highlight a few companies. And I think we saw it with NVIDIA, AMD, Qualcomm. We did have a bust there in MU. But we don't know how strong that projection was for their EPS. There must be something going on at MU that their EPS would project to drop by 50%. I question that, but let's just assume it's true. It did not fit into the narrative that I was posting, right? Which is most of these are undervalued when you really look at it. But long story short, when you wrap this all up into the Qs, the way I spend most of the time on this channel talking about the Qs, there's reason to feel okay about purchasing a share of Qs, potentially TQs, things like that. You don't have to go all in here on whatever this is, September 28th. doesn't have to be an all-in day. Pick off a share. I bought 1 share of Q's today for $280, and I couldn't feel better about it. But we do have to be mindful of our money. We know that savings accounts, you know, are sort of guaranteeing us whatever they're up to, 2.5%, 3%, I think, on my Ally one. So there is some risk-free money to be had. But if you're not bailing out of the stock market for, you know, how about 2 years? If you're not getting out of the stock market in 2 years, let alone 3 to 5 years, it just seems like a no-brainer. So I do want to say hi to Greg Allen, who commented I would buy a semiconductor ETF such as SOX or MSMH instead of trying to guess the winning stock. I agree with that. So you bring up a good point. The thing with semiconductors, and everybody was a winner with semi stocks in 2020 and 2021, right? Because the demand across the industry absolutely exploded. But to Greg's point, if you're trying to figure out if NVIDIA, AMD, or Intel or Qualcomm, if you're trying to pick one that you think is going to do better than the other, unless you have extra money to make that bet, you're definitely going to be better off with getting a semiconductor ETF, or quite honestly, from where I sit, you know, the Q's has a pretty hefty amount of semis in it, and that would be another way to play it and not be so exposed to what could go wrong. Let me see. I used to have a bookmark here. Oh, good. This is right off of the Q's website, and I'm just going to sort it by percentage. So this is a live look at the holdings of the Q's, and we're talking semiconductors, right? Ironically, Apple at the top, 14%, which, you know, Apple's teetering on a negative news headline both today and in the recent past on how they'll sell. But Apple's making their own chips. Okay, you could argue that they're, not solely a chip provider, but they're certainly tied to the industry. So you have Apple. Down here you have NVIDIA, 2.54%. Broadcom, basically 1.82%. Cisco makes some chips. Talked about Texas Instruments, Qualcomm. There's plenty of them in here. Intel, AMD. Probably missing somebody. Applied Materials. You get the point, right? So if you really want to get in this game, if you agree with me that chips are, conceivably undervalued, then QQQ is one way to get a piece of them now when they're underwater, or get into one of those semiconductor stocks. So it's just something to think about. Headlines are bad, guys. We know that, but we also know that if you're in the long game, it could be an uncomfortable time unless you know that you're holding for long, and then it's not uncomfortable anymore. And that's kind of where I sit. So glad to see some of you folks today. And don't forget on your way out that Seeking Alpha special offer is in the description. Kevin, Greg, thanks for popping in. Good to see everybody. We'll see you on the next video.